Hi everyone, this is Rohit from Rice and Mastery, and I'm excited to have Rob Tominey, who's the founder of Further, which is a venture capital fund investment platform bringing high quality venture capital funds to more investors. Rob was earlier the founder of Mainstage in 2011, which was a travel and events platform for third party travel and event products. Rob has done his bachelor's from University of Manchester. Welcome to the show, Rob.
Hey Rohit, how's it going?
Great. You have an interesting journey. You started off with a main stage, and now you're building further. What got you into this crazy world of startups?
Yeah, so I was as you say, I was running Mainstage, and I enjoyed doing that over my 20s. It was a great company, festivals, but I think I turned into a bit of a nerd towards the back end of my 20s and went back to my economics background and just absolutely fell in love with the startup economy and the venture capital ecosystem. Like it just seeing all the really exciting companies that were coming out of the space and essentially seeing that as driving economic growth in the country, driving change, driving productivity, and it's an area that I really wanted to get involved in. So Mainstage had taken on some VC backing, and I was at that time I'd done a secondary as part of that, and I was also looking at ways that I could invest. And so it was mid 2010s, all the peer-to-peer loan platforms or other democratized finance, such as Nutmeg democratizing financial advice, or Property Partner democratizing property investment, and yeah, peer-to-peer, as I said, democratizing debt. But I really wanted to invest in early stage, and I saw crowdfunding, but I thought that the quality was just terrible. It had like it had asymmetric selection. You had generally the companies that couldn't get VC funding going on there, and when they did raise funds on there, you weren't able to actually properly due diligence them because they gave a flashy pitch deck and a nice video, but no actual solid hard numbers. And that's what I wanted to see. I wanted to be able to, if I'm going to put a few £1,000 into something, I want to be able to properly due diligence it. And so seeing that wasn't the way to invest in startups, I wanted to find the way to what was the way to invest in startups. And I looked at the VC fund that had invested in Mainstage and numerous other funds out there, and there was no way of accessing them. Every other corner of finance had been opened up to all investors, except for venture capital, and that's what we started to look at doing. I say we because around that time I contacted my old uni friend Seb, who was a VC investor at Triple Point, and we've been starting to attack the problem together. So we started looking at all the different regulatory challenges and what was possible to be marketed to whom, and which funds we should be going for, what other challenges the funds had on their side. And they've got a lot of challenges on software, on reporting, and on investor management. A lot of those are things that prevent them from reducing their minimums, and so we started about solving them, and that was 2020. We fast forward to now, and we've launched Further. Further's now the platform where many more investors can access venture capital from reduced minimums, and that's facilitated by the software and the process assistance that we deliver to the funds.
Interesting. And you made an interesting point about the crowdfunding platform. I've invested into Republic, which is a popular crowdfunding platform in the US, and I agree that the quality of the startups are not always great. But how can a retail investor invest into funds? Does the investment committee allow retail investors also to invest into tech startups and also into funds? Or did you have to walk through any of these criteria in order to ensure that Further is able to invest into let the retail investors invest into these funds?
Yeah, so it is quite interesting because you think that automatically if an investor can invest into an individual an individual company, then they would definitely be able to invest into a venture capital fund, because that's diversified, it's managed, it's much more hands-off, and it requires less expert attention. But there's actually only two fund types that all investor types, when I say all investor types, mean restricted, sophisticated, high net worth, they all need to go through a classification. But the vast majority of people can classify as those. There's only two fund types that all those investors can access, and that's EIS and VCT funds. LP funds are still only accessible by sophisticated and high net worth investors. But yeah, and there's a few other different restrictions, like you can't go lower than £2,000 for a VC fund investment. EIS fund investment. But yeah, it's generally more possible in the UK than anywhere else, which is great. It's one great aspect we've got about our financial system is that in some places it does really foster competition, and in this way it enables a vast array of investors to invest into venture capital.
Interesting. And especially when it comes to EIS, funds, are other retail investors, are they supposed to give capital gains on the investments that they make, and what's the benefit for them if they invest into startups and funds?
Yeah, so EIS funds is a tax advantage structure in the UK that's only accessible by individual investors. So that's to say, if you're a pension fund, you can't get the tax benefits by investing in an EIS fund. And in a lot of circumstances, EIS funds will invest into the same deals at the same prices as a normal LP fund. So in those situations, just any advantage on top of a standard investment is a real advantage to the retail investor. And so they can claim up to 30% of their 30% of their investment back as income tax relief. So if they paid £20,000 income tax over the year, then hypothetically they could claim up to that amount in EIS relief based on investing in a number of startups. They also can offset any losses against tax. So if one of the startups within the fund fails, then the amount of their money that's gone into that startup can be claimed back against tax, and not the entire amount, but just the pro rata tax amount. And all the investments are capital gains tax free. So they're serious financial advantages to being an individual investor in this space, and that's what we wanted to unlock. There's historically only been a select few people that are taking advantage of these tax reliefs. It's generally only been the high net worth individuals, because they've been able to invest into funds, and that's what we wanted to open up. We wanted to open up not just funds, but the investment patterns of high net worth individuals to more investors.
Got it. And Rob, you've tied up with funds like Antler, Triple Point, Accession, and others. How do you look at deciding which fund do you need to partner when it comes to for them to onboard them onto your platform?
So what we really didn't want to do when we were doing this is to be a fund supermarket. We didn't want to have all the funds in the world on there. We wanted to have just a select few, so that we didn't overwhelm the investor with choice. And within that select few, we're trying to get some diversity. So we've got Triple Point, which is B2B SaaS, and slightly later stage than, for example, Ascension, which is the just recently won the best seed fund in the UK, early stage and generalist. And then you've got Pembroke, which will be coming back online in September, October, which is a consumer fund. They back the likes of Five Guys and Plenish and Pastor Evangelist. And then Antler is super early stage, and you get SEIS relief with that, which is slightly more generous than EIS relief. And so the number one is diversity within our fund range, and then also we're looking for a strong track record. we're looking for a strong management team, and we're analysing their investment thesis to make sure that it make sure that we think it will return well for our investors. Obviously, there's always risk with venture capital investing, but we want to make sure we've selected the best funds that are available to present to our potential investors.
Got it. And especially for those who want to get into angel investing, how should they think about portfolio construction? You've invested into startups, but should they have a broad outlook of investing into startups which are early stage and have and are not a sector or stage agnostic, or should they focus on a specific sector and double down on that?
For angel investing, so investing in individual companies?
Yes, that's right.
So angel investing is really hard. So you need to have a really good deal flow, and you need to have a good insight in the market, and you need to have I think just like a fund, you need to have your thesis on what the future is going to look like. And so I would say, like, it completely depends circumstance to circumstance. But if I was investing as an angel, then I'd only go for areas that I had that I could outperform, areas where I had a specific insight, and areas in which I'm really connected within the network. And so likely that would tend to end up being one style, because like that's the only way that you can outperform a fund, because the funds are working day in, day out to source deals. They're working hard on due diligence, and they're getting sent so many more deals than an angel investor would. Like your average angel investor that's just with no network and just trying to get out there is generally just going to be sent scraps. But there are good angel investors that have just got real strong networks, real strong deal flow, and they've got a proper insight on what the future is going to look like in that space.
Got it. And especially when it comes to markets, what are your thoughts? And should an angel investor look into how big the market is, because initially the size of the market may be small, but over the years it will become bigger. Like, for example, Salesforce, when it started off, had a small market, but over the years it did become bigger. So how does a investor assess how big is the market going to be? Like there are new markets coming up, like especially in the Web3 and the AI. But how do you judge how the market is going to be in the next couple of years?
Yeah, that's tricky. I mean, like, there's so many dynamics at play, because if you're investing and you look at a deck, and the deck's always going to have a humongous tam SAM. And yeah, like the real TAM is going to be quite fluid. It's going to change with market conditions. Like I think for Web3 crypto startups, as you mentioned, like their TAM's going to have massively shrunk over the last few months. But yeah, I think that if I'm investing, then yeah, you've got to anticipate some growth, but you've got to take a view on the future, and you've got to build your model out based on that.
Got it. And especially for retail investors, how much of their portfolio should be into risky investments, especially into startups and crypto, which is also risky. What percentage of the portfolio would you recommend them to put aside for these risky bets?
I mean, I have absolutely zero in crypto, and I never intend to have any in crypto until I see an actual use case, an actual value coming from it. But it's also hard to kind of give advice on this. Our compliance company would have a field day if I was, but there's like just two data points that I'd mentioned, that the FCA recommend that restricted investors, so this wouldn't count sophisticated high net worth, restricted investors don't put any more than 10% of their net assets into alternatives. And if you actually look at the stats, that, like, obviously if it depends based on different investors' investment horizons, but the likes of the Harvard endowment would be putting up to 50% of their investments into alternatives. I very much subscribe to the black swan investing theory of, the vast majority of your portfolio being in something steady, and then you have your small portion of your portfolio that is in something that is able to rapidly outperform and outachieve everything else. And that does seem like a solid way to invest. It's proven out historically, but that's just my thoughts, and definitely not advice.
Yeah, no, I totally agree to the black swan strategy of putting 90% into, say, bonds and 10% into alternative assets. But looks like there's a recession in the market, and how do you analyze the current state of the venture market, especially where a lot of investors are backing out of the public market and the private market? What would be your advice on where do you see the current state of the venture market going from there?
Well, I think it depends when the fund's investing. Like, I'm very glad that I didn't invest in any funds that were investing at the top of the market. But if I was I've recently put money into some VC funds on further, because I believe that now's a good time to invest. You want to invest when other people are taking the money off the table, because it's the valuations are down. You've seen Klarna's valuations being reduced by 75%, and that's happening across the board. And so if now's the time to invest in startups at lower valuations, and that's absolutely great. And so I think that's an aspect that people should bear in mind. But, like, it's not just about, like, with the stage that we're talking about, it's not just about what's going on in the public markets, because there is actually a very limited correlation between the public markets and early stage startups, because the return potential is so far in the future. It's not so linked to what's going on right now in the public markets. Like, these companies aren't going to be going public for 5 years plus, and so the actual specific dynamics right now don't really matter so much.
Got it. Interesting. And you built Mainstage, and now you're building further. How do you look at hiring, and how do you ensure that you have the right sort quality of talent which is joining you and helping you grow the company?
So I mean, it's another benefit of the quieter market right now. Like, when so much VC money is going into so many startups, it's really hard to get talent. And we did see that. We did see it was getting really, really tight around Q4 21, Q1 22, and obviously starting to loosen up now. But I think that talent's important, and it has been tough, but it does seem to be getting a bit better now. We've just got a couple of jobs we're hiring for, and I think that being remote first is really crucial as well. Like, our new head of marketing, Jamie's just joined us from Glasgow. My co-founder Seb is currently living in Colombia, and I'm going to spend the winter in South Africa. And that ability to be remote enables us to just hire from around the country and around the world, which really puts us at a strong advantage. So I think overall, on the whole, I'm definitely positive about hiring in the future.
Got it. And especially when you're looking at building a company, how do you decide how to hire someone external versus promoting an internal talent inside the company?
Yeah, it's a good question. When I left Mainstage, the person that filled my shoes was my previous number two there, and that kind of role really does help. Like the fact of having the experience and seeing the business from within, and he's done a great job on the back of that. But yeah, like I think it just depends on the individual circumstance, really. Like if you have got that talent within, and if you have been able to train those individuals up, then great. You do have massive advantages from that. But yeah, there's always benefits from hiring externally as well, because you've got the ideas that have come from another company. Like especially when you're a small company. So my background is small company B2C, and Jamie, who's just joined us, has come over from Barclays, and so we've got a real meeting of the minds from marketing in two completely different spaces, and we're able to take the best of both worlds when we bring forward what we assess to be best for marketing further. So yeah, I mean, probably not too much of a conclusive answer, but I think that there's benefits of both. But yeah, if you can bring that talent up through the company internally, then there's real positives for you.
Got it. And especially when it comes to talent, how do you approach giving feedback today? And has it changed over the years since you've built the companies over the years?
Yeah, it's an interesting question. So I think how we've always tried to do the companies is so feedback is often, and feedback is blunt, very much in the way of Ray Dalio's principle of idea meritocracy and radical transparency to really foster that feedback from around the organization. And so yeah, I think it's something that we've tried to build in. We've tried to build in across the board at all the different companies that we've been building. But yeah, I still do find it tough. Like when you have to say give people tough feedback on how you think they've done or whatever, then it is always tricky conversations, and they always do horrify me having those conversations. I don't know if you've had any similar experiences, but it's never nice giving that bad feedback, is it?
Yeah. I always struggle to give feedback, and that's one aspect of it. I'm always trying to change. But yeah, good to understand about how to give the feedback to your employees and to your peers. And especially I wanted to understand how do you decide what to focus on your day-to-day basis, because as a founder there are a lot of things going on, but do you have a schedule, like a maker schedule or like a manager schedule? How do you schedule your activities?
God, yeah. There's always lots to do. There's always too much to do. But yeah, no, it's just you just got to optimize, haven't you? You've got to see what the most important things are, and then get through those. Like, yeah, it's been quite chaotic as we've been launching, because we've had to get marketing live, but also the sites had to be changed in a number of ways with all the different things we've learned from our initial investors. We're also turning the site into a SaaS tool that third-party funds can use to manage all of their investors. So we've got a lot of work to do on that side, and the developers have to be managed, and that sits under me. Jamie's just come on board as a new hire. We've got all sorts of different opportunities and initiatives, and so yeah, there's always a full day, and yeah, it's just about sitting down. I guess what I do is I sit down and in the morning and work out what the top things I could do with my time, and I attack those. But yeah, it's a lot of late nights generally. Generally does solve the problem of too many tasks.
Yeah, no, absolutely. I think it's always difficult to be a founder. Hats off to the resilience of the founders who are, willing to go really long nights. And how do you focus on mental health, especially because it's all consuming, and you're launching a startup. Are there anything you'd want to share with listeners who are trying to build something on how to tackle mental and physical health?
Yeah, I think it's tough because it's individual, isn't it? But I think having those breaks and having that kind of just complete respite from your work as you see fit is really important. Like, you can't just work all day long and all 7 days long. You have to give your brain a break, and you have to remind yourself quite often, like, what it is you're working for. Like, why are you doing those things? Like, why are you working away on Google marketing, on SEO or whatever, to all week long, just to get yourself a few more visits to the website? And you're doing it because of the bigger picture, and reminding yourself of that bigger picture on a regular basis does help. So yeah, breaks and that help on the mental health side. Physical health, super important, I think. Yeah, weight training is really solid for resilience, and cardio training is just really good for your general physical health. And I think trying to fit those into your schedule where possible is really important. And yeah, like, as much as late nights and etc. are glamorized a bit, there's a time and a place. Like, we're doing it now because it's around launch time, but we're not going to do that 365 days a year. You need to work smart and not just be a busy fool. Like, there's plenty of stories of people that are just there, sat at their desk and not really actually being productive, but just feeling that they need to work to be a founder. But yeah, if you actually break it down to first principles and break down what you actually need to do, then the outcome and the amount that you actually work might be slightly different to that.
Yeah, no, absolutely. I think exercise and weightlifting and cardio, as you mentioned, it's something so critical even for employees as well as for founders. And Rob, I quickly want to do the top 3. What's your favorite business book?
Favorite business book? So yeah, that Ray Dalio Principles is solid. And there's another book which is called Power of High Engagement, and that really addresses your questions about mental health and physical health, and it just shows you how you can get the most out of yourself, and it does it in a way where it's not you just working yourself ragged. It's about keeping yourself refreshed in all different aspects of your life, so that you can be a high productivity machine. And so yeah, I'd fully recommend that Power of High Engagement.
Got it. We'll put that in the show notes. And if you could go back in time when you started further, what is one thing you would have focused on or done anything differently?
You know what? I probably would have done it earlier, and I would have done it with more overlap with what I was doing previously. Because starting a business, there's so much waiting time. Yeah. Like, so anyone that's out there that's looking to start a business, I'd say to just get started now. Do it in your evenings, because you're going to be waiting for third parties to respond. You're going to be waiting for applications to go through, and you might as well do that while you've got a day job, because otherwise you're just going to be sat there with nothing to do and waiting and burning down your limited resources in that time. So yeah, I'd recommend I'd recommend doing it on the side to start with.
Yeah, no, I completely agree on that. And what's your favorite online tool? For example, Gmail, Slack, Zoom.
Notion. I'm in love with it. It's that's where we manage everything for the company. And so yeah, I think we'd struggle without that.
Got it. Yeah, no, Notion is also one of my favorite tools. Rob, what is the best way people can reach out to you and know more about Further?
Yeah, so head over to joinfurther.com, to have a look at all the venture capital funds that you can invest in. And to reach out to me, just find me on LinkedIn. I'm Rob Tominey, and yeah, been great to chat, Rohit, and really appreciate the call.
Yeah, no, absolutely. Thank you so much for taking our time.
Nice one.